Let's dive into our working capital multiple choice questions, starting off strong with this question. A firm purchased $10,000 of merchandise inventory on May 1st. The terms of the purchase were 210 net 30. The company would pay what amount on May 9th? Now, if you haven't seen a question like this before, 210 net 30, you might be saying, what the heck is that? And I am here to decipher that for you. 210 net 30 means that so we purchase the machinery, we purchase the merchandise, whatever it is. If we pay that $10,000 within 10 days, we will get a 2% discount. If we don't do this, then we need to pay the full balance of $10,000 in 30 days. And then obviously if you don't do that, it's delinquent, it's past due, and then maybe there are repercussions for that otherwise, but that's beyond the scope of this question. So now that we've gotten that deciphered, let's see. We purchased on May 1st. Looks like we paid on May 9th. So 9 days. That is within our 10-day period. Great. That's awesome. Now let's do a little calculation. We did owe $10,000. However, we get a 2% discount. I'm going to say times 0.98 because it's 2%, right? This is going to get us to our answer right away. That's going to be $9,800. And that is our final answer here. Letter B, $9,800. We have a $200 discount, 2% of $10,000. Awesome. Fantastic. Let's move on. If the dollar price of the euro rises, which of the following will occur? These questions can really mess with people's minds. I do not, I don't blame you. I think it is super difficult. And I'll give you a little trick for these. I'm going to say $1 buys a chocolate bar. Choco. All right. And we're going to replace euro, and that's going to be chocolate. Because think about that for a second. You're using, money itself is just something with value. $1 is $1. A chocolate bar, yes, it has a certain value to it. That value is not as set in stone as the dollar. But think about it, this is bartering, it's exchange. And this makes it a lot easier to decipher the question. You're not going from one currency to another, you're going from one item to another. Dollar to chocolate bar. So if the dollar price of the chocolate bar rises, which of the following will occur? And again, just replace euro with chocolate bar in all of these answers here. I just think it's a great way to view it, right? I mean, yes, if you can get this without doing that, sure, great. I can do that because I've seen these questions a million times. But if you can't, no worries. This can be super confusing and no worries at all. So the chocolate depreciates against the dollar. Well, let's say that, okay, in the beginning, it was $1 equals one chocolate bar. Now the dollar price of a chocolate bar increases, so now it's $2 for one chocolate bar. Okay, so did the chocolate depreciate against the dollar? No, the chocolate actually appreciated, right? It inflated. Now a chocolate bar is worth more US dollars. Okay, so that crosses off letter A. The chocolate bar will buy fewer European goods. All right, now, obviously, this example we've been running with here maybe hit a little bit of a road bump, but still a great way to think about it. So will it's worth more now, will that buy fewer of its own goods? Well, I'm going to say no as well, because this item has appreciated, this has depreciated, this is worth less now, right? So the chocolate bar will buy fewer chocolate goods. That's wrong. That is not true. It will buy the same amount. It has no impact on itself. The dollar price has been changed, but the chocolate or euro price stayed the same, so it has no impact on itself. The chocolate bar will buy fewer US goods. Well, what about that? No, it'll actually buy more because, again, the value of this went up compared to the US dollar. So me having a chocolate bar actually is a better investment now than the US dollar. That is wrong. And the dollar depreciates against the chocolate bar. That is true. It takes now more dollars to buy a chocolate bar. And as such, the dollar has depreciated against the chocolate bar. Great example. Great question there. Next question. What was ABC Company's cost of goods manufactured? If cost of goods sold is $43,000, ending finished goods inventory is $21,000, beginning finished goods inventory is $16,000, and net income is $19,000. All right. With my standard approach for questions, we write out formulas. And with this, I'm going to say cost of goods manufactured. There's actually a few formulas with this one. Some might be relevant, some might be not relevant here, and that's fine. It's just good practice. Whenever you see something that you should write a formula out, write out all variations of that formula, because you never know what you're going to need. I like to describe it. You've got a utility belt, right? You're Batman, and you got to put all of your tools in your utility belt because you never know what sort of situation you'll come across with these questions. Now, cost of goods manufactured, we know one way to write that formula is direct materials plus direct labor plus manufacturing overhead. Are we going to use that one in this case? We will not, but it is super important to know this formula because, well, for one, it's really common, and you might need it. You might need multiple formulas to solve one question. So we wrote that one out. Cost of goods manufactured. We also know cost of goods manufactured relationship with our cost of goods sold. And, well, what would that be? We can use a base formula here, actually, because we have beginning finished goods inventory. We have an ending finished goods inventory, right? So beginning finished goods inventory is 16,000. We've got an A, an S, and an E. We've got ending is 21,000. Now let's think about this. Cost of goods sold, that's probably going to be a subtraction from all of this because, like, what did you sell? What did you get rid of in this example? Well, you got rid of your cost of goods sold. So that's going to be the subtraction from finished goods, right? You're getting rid of that. So wonderful. We are going to subtract out cost of goods sold of 43. See, there we go. And then is there a place here for net income? I'm going to say no. You can dispute me if you want, but I don't see anywhere for net income, right? So we have, just think like beginning, we've got a bunch of finished goods sitting in a warehouse. We've got ending finished goods sitting in a warehouse. And what is our cost of goods manufactured? Well, that's X. And let's think about that. Step back for a second. What's sitting in your warehouse gets increased by an addition to what you make, what you manufacture. It gets reduced by what you sold, and then that gives you your ending. Simple algebra here. You're going to do a lot of algebra in this test. No worries. Get good at it. It'll give you free points in the exam. And now here I'm going to say 16 plus X minus 43 equals our ending inventory amount of 21. Give you a second to solve this. Definitely want to make sure that you can solve the algebra. You'd be surprised. It's okay, right? A lot of people haven't seen this since maybe in school. It's been a while, and that's fine. Just practice it yourself. I don't want any room for error. I don't want you to blame me. Say you can't do algebra. I'm here to teach you algebra. All right. So now, how are we going to solve this? If you weren't able to solve it yourself, we add 43 to both sides. It's one way to do it. So 43 plus 21, that gets you 64. And then you could just subtract 16 from both sides, which gets you X equals 48. X equals 48. Looks like X there, right? Check your math as well, right? Plug it back in. Make sure that number is correct. Definitely double check. Again, 3.5 hours into the test, you can be the smartest person in the world, but your brain's going to be just a little fried. Practice it yourself. Check it out. The answer is, in fact, 48. Did a little algebra there and solved it for our cost of goods manufactured. Awesome. Wonderful there. Let's move on to the last question. Of the following items, which does not belong as a synonym? Here are some great examples of terms that not a lot of people end up being familiar with. For better or for worse, actually more so for worse. It's okay though. We practice. That's what we practice. A lot of people I work with in tutoring, they are not familiar with maybe hurdle rate or desired rate of return, and that's okay. That's why we are here. We're here to practice it. If you knew it, probably have moved on by now. So, which is not a synonym? Okay. So, which one of these is not like the other? So, 3 of these are synonyms. Your desired rate of return. That is what you want to earn on something, right? If I invest in a stock and I want to make 10% on that stock, that is my desired rate of return. It's the rate of return I desire. Similarly, your hurdle rate there is it's similar, right? It's pretty much a synonym. It's saying what you need to earn, like what you need to earn as a rate of return on your investment to compensate you for your risk. And I was hesitating to say that because letter D as well says that. It's the rate of return to compensate you for all the risk assumed, right? So if I'm taking zero risk and I invest in treasury bonds, which are the safest investment, then I should, in theory, not get as much of a return because I didn't really risk my money. If I'm risking my money by investing in a bunch of risky startups, then in theory, I would expect to be compensated well for that risk because my money could have gone kaputs and the companies could have gone under. So compensation for all risk assumed, synonym to desired rate of return, synonym to hurdle rate. Interest rate is the odd one out here, right? This is its own term. It's just an interest rate, and you should definitely be familiar with an interest rate right now, right? So all three are synonyms. Interest rate is an antonym, not an antonym, just not related to these other ones. All right, awesome there. Thank you all for joining. Keep going strong, and I'll see you in the next one. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.